The BRICS thing has cooled off a lot, but kind of like what you said, Bo, I think people have a hard time getting out of the way of what they never see coming. And even the people who were aware of the BRICS have turned their away from it because of the time. It's been easily dismissed, but the pieces are being put in place now. In fact, are already in place. And they've done so in a very cunning manner to where I think they will out accentuate people's expectations. Let's just put it that way. We can come back to that. I know we're going to talk about that, but there's so many things happening here in the States as well. You know, you got you have a stock market as an example where the insiders are moving away, the Warren Buffetts of the world and the Jeff Bezos and the Jamie Dimons and, you know, the Mark Zuckerbergs. They're all selling. The insiders have been selling. Buffett's sitting on $500 billion in cash. And last week we saw the largest volume, retail volume in like an hour or two of $4 billion the market's ever seen. And the retail public now makes up 36% of the trading volume on the stock market. That's 3 times the historical average. That's not good because the retail is typically the ones that get left holding the bag. 50 billion in inflows on the retail side since April 8th, and that's record amounts as the institutional traders are retreating. And that's a scary thing. Of course, you got the downgrade by Moody's, which to me doesn't mean a whole lot. But what I found interesting about it was their debt to GDP projection of 134% by 2035. Now, that doesn't take into account the unfunded liabilities, or we'd already be north of 200%. But there have been studies done that there has never in all of history been a country that's crossed the 130% debt to GDP ratio. Japan is the only one right now, and they're well north of that, and the jury is still out, but you can see their bond market is imploding right now. But no one's ever come back from that line without either hyperinflating or outright defaulting. And at the same time, you have, you know, an administration that came here with Doge and aspirations of normalizing our fiscal irresponsibility, and yet they're raising the debt ceiling. Elon Musk said, well, I tried, but more or less Congress has stonewalled me. And that's not just the Democrats either. And so we have an indebtedness problem where we're taking in $5 trillion in tax revenue each year and spending $7 trillion. So that doesn't work. You're continuing to destroy the value of our currency, to make other countries move away from the treasury market. And that's something else we should talk about too, because as our debt keeps going higher and higher and higher, and President Trump would like to see lower interest rates, and they've lowered interest rates, you know, since he's taken office. They've tried to lower interest rates. And what do you see? Last week, we see $20 billion bought in 3-year treasuries by the Fed, $34.8 billion bought in 10-year treasuries by the Fed, and $8.8 trillion in 30 treasuries bought by the Fed. This means weak demand for long bonds. Foreign buyers are pulling back. The Fed has to come in and monetize. These are all very, very bad things. At the same time, Japan's bond market is doing the exact same thing. And you look at a system the people are involved in, you know, Bo says people will be run over by this. They will be. Bank of America is sitting on $700 billion in bonds that they bought in 2020 at 1%. That's $100 billion right now in unrealized losses. Not to mention, we need to refinance $9 trillion in treasuries this year, $28 trillion by 2028. So let's go to 2028 for a moment. We take in $5 trillion in tax revenue. Times 3 to get to 2028 is 15 trillion. Well, we're halfway to what we already owe, those bonds that are coming due, these short-term bonds. That doesn't take into account the 2 trillion per year in deficit spending. So we're broke, we're insolvent. We can't even, in essence, come up with enough revenue to pay for the treasuries that are coming due. At the same time, you see China slowly selling treasuries. They are now number 3 behind the United Kingdom, who is the second largest holder of our treasuries behind Japan, who has already come out, Japan, and said that selling those treasuries is certainly on the table. and you look at the United Kingdom, one of the largest debtor nations on the planet, buying the debt from the largest debtor nation on the planet. It's two drunk guys holding each other up. And so it doesn't work. And then you see the United States become a net importer of gold to a degree that no one has ever seen before, month over month over month over month over month. In fact, if we look at this last month, the May gold contract will go down into the books as the highest physical delivery for an inactive contract in COMEX history. 25,401 contracts have been delivered. Multiply that times 100, and that's how much gold in ounces has been delivered. But an interesting thing that I read today was that 526 of those contracts as of today are open and undelivered with 1 day to last notice. Now, that tops the prior record set on January this year for an inactive contract. But what's interesting is that those 526 contracts might be the highest ever left standing with 1 day delivered. And basically what that is insinuating is that there is a short that does not have the metal to deliver. Usually there's only 1 or 2 or 3 contracts left remaining at this point. When you have 526 times 100, right? So a lot of ounces, 50,000 plus ounces that have not been settled yet. That means there's a short who probably won't default. They'll come out and find that gold, hopefully. But it's an indication of the cracks that are appearing in the COMEX market when massive deliveries are coming in.
COMEX exchange, when enormous shipments are arriving into COMEX, and this has never occurred before. So, I suppose I would merely state that you're witnessing a rush to tangible gold, a shift away from treasuries by the foreign nations who have been our greatest lenders, and a shift away from stocks by the major capital, the insiders. Simultaneously, the retail traders are flooding in at record levels, hand over fist. What could possibly malfunction with that? So yes, I'm not optimistic. I wish I were, but I'm not. Final point, how about this one? Presently, the top 10% of American households represent half of all of the retail expenditure. So, when you mention this being a strong economy, my ass, it's a strong economy. You have the top 10% purchasing everything, and the lower 90% are suffering in a setting where we're informed inflation is under control. It does not appear that way to me, as the expense of living just seems to be rising and rising and rising. So, my home state of Florida here, on July 1st, 2026, will be the third state to formally acknowledge gold and silver bullion as lawful money, with no sales levy on trades, and even approving payment networks such as PayPal to transmit assets in gold and silver. So, developments are unfolding in manners that honestly we've never witnessed. From legalizing gold and silver, to our lenders moving away, to the organizations shifting away from stocks, and a large retail speculator now being the biggest player. Numerous possible points of interest and, conceivably, of worry to me. There's no doubt but that the military-industrial alliance is restraining the price of silver. There's absolutely zero uncertainty in my mind. And it's notable that BlackRock, along with JP Morgan, is the chief custodian of SLV, the globe's largest silver trust. So, you examine a country like, or a corporation like BlackRock, who controls all of the defense contractors. They construct the advanced weapons that require silver. So, they depress the paper price, and then they devastate nations like Ukraine and obtain the rebuilding contracts, that being BlackRock. And so, it's a scheme that they've executed to enrich themselves, to such an extent where you examine the LBMA, who is transacting 3.5 times yearly worldwide mine output daily, as much as 3 billion ounces per day. They allege to transact 290 million daily, but they claim those totals are tenfold understated, as they only post the ultimate settlement figures. We observe the May contract also, which is an active delivery month, and there's somewhere just beneath, I think, about 15,000 contracts that were shipped. I haven't reviewed since last week. Last week, it was just beneath 14,000. My assumption is it's somewhere between 14 and 15. If it were 15,000, you're referencing 75 million ounces of silver. Who the hell's assuming possession of 75 million ounces of silver? So even scale it back and say 65 or 70 million. I don't know what the precise figure is for the ultimate totals, but you're referencing record volumes. That surpasses the all-time milestone. And simultaneously, we witnessed last week that about 16 million of those ounces were transferred from banks to non-banks. It was the third largest transaction in history, as of last week, by banks to non-banks for a single COMEX agreement. That implies you have family offices and sovereign investment funds and manufacturers. And it also, to me, indicates that organizations are sort of exiting this arena as they're liquidating their position or settling short positions by delivering. It's a full-scale rush for genuine bullion, whether it be gold or silver. And the value is a mechanism of distraction. And the sole manner that you can persist in distorting a market is to push it in the direction that it is moving. But there's enormous shipments here. There's enormous shipments all over the world in silver. Eric Young, King Kong on X, is outstanding. And he said, "Have patience, silver stackers." China's traveling around acquiring everything they can at these subsidized rates, employing the West's subsidy to amass everything they can because they're considering in terms of generations for their future. They're the same nation, the second largest supplier in the world, that's going all around Asia, South America in particular, Peru, purchasing all the doré and the concentrate. Now, why would they do that? Doré is a roughly refined bar, as we've discussed before. Concentrate is a sludge byproduct of the mining, compensating double what the West will, forwarding it back to China to process it, not just in silver and gold as well. Why would the greatest producer of gold and the second largest supplier of silver, if price was truly representative of worth, be going out of their way to not only stand for shipment across the board on all this material, but also to travel around the globe and purchase unrefined silver, bypass the market, and forward it?